Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of Mobileye Global, or ticker symbol MBLY. So I wanted to go over this ticker today because there was recently a nearly 25% drop following news that basically price targets lowered and their expectations for quarter one of 2024 have been lowered significantly, I believe about 50%. So, there was a massive drop in the stock price. It does look like it has settled around some key levels that I want to go over, but it is also quite possible that it will continue lower. So I also want to caution about that. But just looking at the chart here, it does look like there are two gaps to the upside from this recent drop. And from current price, going up to that first gap would be a nearly 30% gain. But, of course, there is risk that price could go lower. So I will go over that. And then there's also this other dashed blue line that I've drawn here that is based on the low of October 30th. So while there are these two gaps to the upside here, you could kind of think of this as kind of a intermediate gap that would be filled based on the lows here, and that is going up to about $33. So that is not quite, but nearly a 10% gain from current price. From this red line, though, that is a more than 10% gain. So something to consider there. And so these lines that I have drawn here are based on, let's see, the red one is based on these, let's see, 4 touch points, or pivot points, beginning with the low on January 4th of 2023. And then we also have this dip down in, looks like April 27th. And then this kind of, again, intermediate level, this orange line is based on the low of January 6th, 2023. And then I do have this third level here drawn in yellow at about $27. And that is really, based on the low of November 22nd, 2022. And so if we look at the current price, it does look like on, let's see, January 4th, the price did open below that orange line, but then closed above both the orange and the red. And then on Friday, January 5th, we did get a little tail down from that candle. But it did close above both of those levels. It also, closed above the previous close. So that does suggest there is some strength there. However, I do think it's going to be pretty important to see how this behaves in the next couple of days, if it does hold this red line and where the closes are. And I think a really nice example of why it's good to be cautious with a stock like this is Nike. And I recently did a video on Nike. I believe it was on the 26th, so that would be, it might have been pre-market. I'm not sure when I did it exactly. But there was this big drop down following earnings. And I suggested in that video that, I'd be curious to see if it holds around these levels. I hadn't added any lines to this chart since that video. And it looks like it did not hold up at this yellow line at $106. And I had also drawn this orange line, which I think is really cool because, price dipped down to that level. So, it is quite possible that where Nike is at right now, around 101.88, this orange line, or maybe right around $100 a share, maybe it will find support there before continuing up maybe to this yellow line where we see this volume shelf here. But I said about Mobileye, we did see some consolidation here with Nike, but then it did drop down. So this is very, very risky because like with Mobileye, we could see a drop down to this yellow line. And I think kind of a tell with Nike, if we look at the low from that day that it did gap down at 107.45, we did get multiple closes above that, but then on the third day, we did get a close below. And then Following that day, though, we did get this big green candle, but it looks like we got this topping tail, this big, what looked like and ended up being a reversal signal on, let's see, December 29th. And so I do think that this pattern, while there was this big green candle, that was really just to bring on any late bulls thinking that they're going to miss a run up, and then the day after to sell positions and drop the price. So, considering that with Mobileye, we actually don't have that. Like with Nike, we have this, there is quite a tail on this candle that's on the 29th, but that does look somewhat like an inverted hammer candle because there is a longer wick than there is a tail. And so that suggests that price would come down. Whereas with Mobileye, we do see a pretty significant tail relative to the wick at the top. And so that does suggest it is a bullish hammer. However, I would like to see another day closing above this red line before we do potentially move higher up to fill this initial gap here at $33 or even higher. But, this could also be bearish consolidation if it does hang out around here. And if we do see, it start to consolidate in a uptrending pattern, that could be a bear flag that would then break lower. So something to consider there. And I should note, if you are interested in the technology of Mobileye, which is really, based on developing driver assistance systems and self-driving systems, I do think a perhaps more compelling company that seems like it's at a better place as far as the chart goes is Luminar Technologies, or Laser, L-A-Z-R. I did just recently go over this in a video comparing it with ChargePoint, and I do think that the bottom could be in here at $2.30, and we could be seeing a lot of upside with this. So if you're interested in the technology, this might be a better play. If you're interested in the gap and filling that gap, Mobileye might be of interest, and Nike might be finding support here at the orange line, so there could be a potential reversal there. But, those are my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments below, and subscribe to the channel for more videos like this. Thanks a lot for watching.